Good afternoon, everyone. Quick sound check. Can everybody hear me loud and clear? Let's do audio check, video check. What's going on, Coach Paul?
Hey, Coach Jay, happy Monday.
Happy
Uh,
Monday. Everyone awake? No one fell
is
asleep
that
at their desk, right?
Bueller?
Right.
Bueller.
Um, what a day. What
Wow.
a day. Feels like it was still the weekend, depending on the markets that you were trading. But it looks like we sound good. We look good as well. So let's get into it. Welcome to At the Buzzer, our market recap. If this is your first time here, I'm Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we think our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I am Coach Jay. I've been a Top Step Performance Coach for a little over a year now. I've been trading for about 11 years and moved over to trading futures about 5 years ago. And that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, Coach Jay, I'm Coach Paul. I've 4 decades of trading experience, focused on the futures industry. I've been with Topstep for about a year, about 15 months, as a trading coach. My focus in trading is on risk management, and I'm a technician. I'm also a basketball coach and all around sports enthusiast.
Thank you for that, Coach. Let's get into it. We'll talk a little bit about the news. Wasn't too much on the calendar for today. We did have a services PMI and manufacturing PMI number come out at 8:45 Central Time today. Both lower than what was expected and lower than the previous print from last month. Just showing some weakness in services and manufacturing sector as far as labor goes. But we've kind of seen that as far as labor numbers go as well. And then with production being down. We do know that the Fed is no longer in their blackout period, so we're going to have a lot of Fed speak going on over the next couple of weeks. We did have Bostic and Goolsby speaking today. Goolsby saying that many more rate cuts are likely needed over the next couple of years. And if we check FedWatch right now, it's a 50-50 probability of either a 25 basis point or a 50 basis point cut, but pricing in a 100% probability so far of some type of rate cut. Uh, but we will see.
100%, huh?
100% probability until that changes. And it's going to change, right? But between now and the next uh, FOMC meeting, which is in November, we will see that number fluctuate, and we won't know what the true decision is until we get a decision. And Coach Hoop asked a great question in the chat: why won't bonds rally? I think we were just talking about that before we got on, Coach.
Yes, we were. My why won't bonds rally? My straight out answer to that is the size of the government debt. The government finances its debt through bonds and treasuries, um, leaving a large supply. Um, and that has to be, I mean, how many auctions do we have a month now? That's a sign of the size of the debt. Um, so that's my reasoning. I could be wrong, but that sure seems to be the catalyst to keep the bond and the treasuries down. How about yourself, Coach?
I'm gonna lean on what you said there, where I don't even look at the fundamentals behind them, but it makes sense, right? If rates are coming down, prices should be going up, and they're not. But I am not an economist, and I don't even attempt to play one on Topstep TV. But I will trade the
Yeah,
markets if they move. Um, but
there you
the only other news we had was, the U.S. potentially sending additional troops to the Mid East amid escalations. So we know we do need to watch out for that, especially if you are, you know, first and foremost, if you have any family in the military or anything like that. But if you're trading
yeah.
crude oil, knowing that any escalations in the Middle East can have an effect on those markets as well. Uh,
You know what's interesting, Coach, is
mhm.
that gold made its all-time high and crude was a half a dollar down, a half a dollar.
Right,
Um, Speaking of economics, in a pure economic thought pattern, that shouldn't happen. They should
right.
both be up, but
Market's going to do what markets do. Uh,
Yep.
so the way we start every segment by focusing on the top percentage movers on the day. Again, there's 30 something markets that you can trade with Top Step accounts. And we're going to talk a little bit about some outside markets today. But to the downside, we had silver down 1.65%, RBOB gasoline futures down 1.7%, and platinum down 2.22% for our biggest percentage mover to the downside. To the upside, we had soybean meal up 2.91%. I don't like this nat gas contract because it doesn't trade a ton of volume, but E-mini nat gas up. Actually, here we'll take that out. Corn up 2.8%, meal up 2.9%, and nat gas up 5.48% for our biggest percentage mover to the upside. Did see some news about Microsoft, and I'm gonna get that headline wrong, so I'll put it in the chat a little bit later.
They bought
Yeah, go ahead.
Three
Yep, you got
Mile
it.
Island,
There you
and
go.
they're going to be using for the, for those of you, I think I was in college when that happened. 3 Mile, they had a nuclear meltdown. It was, at one time we are thinking it's the end of the world. That nuclear reactor in somewhere in Pennsylvania
Hmm,
was purchased by Microsoft, and they're going to use it to power their um, AI um, programs.
there you go.
Very interesting,
There you go. And that's why I
actually.
appreciate Coach Paul being here because I got half of the headline, and I throw the assist to Coach Paul, and he finishes the layup. So, thank you, Coach. As
Make
far
the
as our
layups
as far as
or
our
sit on the bench.
major four markets, we got the S&Ps up 0.2%, we got Nasdaq up 0.17%, crude oil down 0.66%, and where's gold on this list? Gold a little bit up as well, 0.21%. Um, Not a lot of directional movement, and really not a lot of movement at all. Let's go to the S&Ps. We did have house account trades in the S&Ps today, so we will focus on that. Uh, Pulling up a 30-minute chart here, Coach, and I'm going to get your moving averages up here in a second. As soon as I triple. There we go. And just a lot of overlap. We are still above the 200 moving average. Take this off. Are still above the 200 moving average on the 30-minute. Uh, the 20 and the 50. The 20 is above the 50, but not a clear distinction between them or a directional angle, right? Like we see something like this where this is, a 65-degree angle. We're kind of like in the 20-degree range here, and pretty choppy.
Well, another word for choppy is balanced.
Yep. There you go.
Um, Today was a balanced day, and like you brought those shorter term moving averages, the 20 and the 50, they were braiding. It's another sign of balance.
Mhm.
With it, also the first hour's range, the initial balance we stayed within, and we're not. I won't say violently unchanged. We were unchanged.
Yeah.
uh, so these are the markets we expected in the summer. Um, and so what do we learn from that is, expectations versus trading in the present.
Correct.
Today brought some good opportunities for people for um, you know for some traders.
Hmm.
For other traders who are more trend following or breakout, this can be a losing
Nightmare.
day.
I'll say
Yeah.
it straight up. It's a nightmare for me. And we'll talk about the markets I traded
So,
because of this. But we did, there is opportunity here. We did see house account trades. The house account went 2 for 2 today, in the S&Ps, taking buys off the low of the range. Where don't recall exactly where the first trade was on fast markets, but it was lows of the range. I believe they were buying around 66, 57, 66, and then just looking for a trade back up towards the high of the range. And then during power players, there was a trade that was pretty much a buy off of settlement, which was right at 57.62. I think the team got in at 57.63, and held that trade for 4 hours. Really nice hold time on a 10 contract trade. Turned out to be a $5,000 winner. And that's how you had to trade that market today. right? Where it wasn't going to be a quick move. It required patience. And Dolby being the range trader that he is, and that trade being, he's the executor on that, is really comfortable holding that, right? Because with a range bound trade, you can kind of throw time out of the window. I'm expecting price to go from one area to the other, right? And it either does it or it doesn't. But you don't really get to decide how much time that's going to take. And I think that's personally why I don't do so great with range bound trading because uh, reading momentum, reading volume. I like things to happen pretty quick, and you don't always get to choose that.
You like action.
There we go. There we
Yeah,
go.
I'm the same way.
Let me know really quick if I'm right or wrong, right? And I'm okay being wrong, but just let's get it over with. Rip the band-aid off. That's the way I feel about it.
And this is a good time, identifying your personality or what you're like as a trader is one of the most important steps you will take in this game.
Mm,
Um, Knowing that, like we both, I think it's probably from basketball or
yeah,
football. You like action. I'm not.
right.
I don't.
It's the reason I'm not a baseball coach.
Yeah. And I appreciate a great pitching duel,
Absolutely.
but I, you know, I like action, so I prefer basketball, and I appreciate baseball, but the action I appreciate hockey.
Hmm.
There's a lot of action there, a lot less scoring. But if you go to me, if you're at a game, that's action. It's
Right.
always action. But going back to the concept, know what you're like, know what your personality is. If you're if you don't accept that and you're always looking for action, and I've been down this road, on a day like today, I get my eyes ripped off.
Yep.
I buy the highs, sell the lows, but get low, we get do it again, double up. Um, but knowing that and trading in that type of execution, that strategy is going to help you a lot.
For sure. I think the best trade was during the London session in the S&Ps and in the Nasdaq. We got this little sell-off here. For whatever reason, I couldn't sleep last night, so I was awake and I saw it. Didn't trade it, but uh, I think that was the best trade. We got a nice sell-off here. This pretty big 30-minute candle, but then we rejected pretty close to the lows near Friday session. We know we have that FOMC candle, which is here. The high of that candle being 57.55. We traded into the candle in the London session, didn't accept price back in there and just kind of bounced. The market's just balanced, like you said, coach. Trying to figure out what we do next. We do know that the S&Ps made new all-time highs on Friday, 57.97 half, and maybe waiting for the Nasdaq to catch up before we continue to run, where the S&Ps do look stronger. Let's go to a. Go ahead.
No, I'm good.
Go to a smaller time frame and see what real opportunity there was to potentially trade this. And I know for me, if I do try to trade these range bound markets, and I think I took one MES trade today. Uh, to me, it's a little bit better to zoom out and look at a 15-minute chart when the range is this tight, right? Because every 3-minute candle overlapped the one prior to it. And that's just, to me, asking to get chopped up. Really, not too many volume anomalies uh, to talk about. Uh, where every other bar was an overlap. So if we go out and look at a 15-minute, maybe a little bit clearer, and I can see where the extremes of the range are. Anytime I'm looking at a market like this, coach, and I'm wanting to get in and fade the extremes of the range, I want to ask you, how do you set your stops with range bound trading? I know you use two ATRs, but I feel like a lot of time I've seen traders try to short the high of the range, but want to keep their stop really tight. Um, I almost
That's a
think we should
very
do the
good
exact
question.
opposite. Go ahead.
Well, we don't. Well, that's the bottom line is uncertainty.
Hmm.
No matter what your trade, if there was certainty, we wouldn't be talking. There wouldn't be markets.
Right.
So, as one of the things is that initial balance,
Hmm.
the first hour of trading,
Right.
using that. And I would one ATR, or you can go real tight if after the first hour, and you notice that there's the first hour. Let's frame that out. The
Uh,
initial balance.
Here's the high. There's the low. The two blue lines we got there.
So on that low, since we don't know when it's there, is it going to hold or not?
Hmm.
If you buy it,
Yep.
you could, to me, right there, the average true range. Um, and I wouldn't use an hourly. I'd go bring it down to like a 5 or a 3 minute and risk two average true ranges. Uh,
Yeah.
and if I lost, okay, it's,
Right.
it's part of
Then
the
it's not a
game.
range. Yeah. So I agree with that. So yeah, and we have traders in the chat, right? Some saying you need to keep a tight stop in a range because if the range breaks, it can be violent. Um, I almost think the opposite, right? Where if my idea is this is a range trade, I don't want the range to get extended by a tick, stop me out, and then go the other way, right? So I'd rather be very wrong and let the market break out of the range and not get that random tick. But it's it's just a different trade management, right? If I get short right here, so we're calling the high of this range where the initial balance high was 57.84. If I get short here around 57.79 and I go with a two ATR stop, like you said, coach, that's 6 points. That's out of the range. That's fairly tight, but two ATRs is 12 points. That's way out of the range. A random wick, if a wick goes that high, then I was just wrong about this being a range, right? And I can
Yeah,
give it this space. There's less anxiety because it's this far up, and it's just, hey, you're either right about this being a range or you're completely wrong.
sometimes we try to over complicate things,
Hmm.
but to avoid loss.
Right.
And I've been, it's happened to me sometimes. Like, where can I get so I don't have to lose? And that doesn't come straight out. I'm not saying it, but my subconscious is like, or,
Right.
or okay, I'm willing to lose. How much am I willing to lose? A good trade, by the way, half the time is a losing trade.
Mm.
Don't fall into that trap that I lost money today. I traded poorly.
Right.
That that's not necessarily true. You could trade great and lose and within reason. Where
Hmm.
I believe a lot of traders get into trouble, and I have, is like, I don't want to lose, so either I put too big a stop in or too tight a stop.
Right.
Because if it's too tight, you're gonna get wicked out how many times? So, like today, one of the things I would do, and we've done this, is put a the beauty of the VWAP.
Hmm.
Put a VWAP off the first hour if we're into the first hour, and I believe that thing stayed right in the middle of the range.
It was a flat line.
It was okay. It's a flat line, and we knew that after, right? So as we made new lows and VWAP was flat, I'm first thing I'm eliminating is I don't want to get short down there.
Yeah.
For me,
Right.
if I look at that, because volume isn't following it.
Right.
If the VWAP was going through with it, there would be urgency. There's no urgency there. So then I can make evaluation there that okay, two ATRs.
Hmm.
Because if it does, it would be larger than normal move if it was two ATRs from there. Then VWAP would stop, most likely start curving down.
Right.
And if that makes sense. So
Yeah. You'd be so far out of the
um
way. You'd be so far out of the way with a two
yeah,
ATR stop. Um,
then it would mean something. Right? There was
right.
actually, so that's another way to look at it. But today, when I saw that first hour, I expected a bit of a rally, and it wasn't.
Same.
It m- but one of the things that I now look at is that VWAP, and then when it was flat, I just, in my core position for my swing trading, I did nothing, and I didn't make a trade in the equities today.
Nice. Yeah. Like I said, I think I took
Uh,
one MES trade, and may have been a small winner. But outside of that, most of what I did today was in other markets. But yeah, just trying to get a vision of how we can trade this without getting wicked out. You see a couple of wicks below the initial balance, but no real extensions. Jayhawk had a comment or question: if the market remains in the initial balance range till lunch or returns back into that range like on Friday and today, does it mean that it will remain in that range for the rest of the session? I can't answer that definitively. I don't know the stats on that, but if that's a pattern that you've seen, see how many times you've seen that pattern play out, and that might uh, dictate your trades going further. If we're going to have a range contraction day, this was a 20 point. Actually, go back a little bit because we do need to include the London session. This was a 39-point range day on the S&Ps. The daily ATR is 77 points. So range contraction day, maybe that's exactly what we get, and it stayed
Yeah,
in that
and
initial balance.
the one thing I would add to that, nothing is certain, but history does repeat itself. And if you find something in that, I mean, you might have something there. Basically goes back to framing out your risk in a high, probability.
For sure.
But we know this news can come out at any moment.
Change everything.
Um, so it's an interesting um, observation. I mean, make something of it. But remember, there is no certainty. That's the beauty of trading. Once you, I tell you,
Just embrace it.
once you embrace it, you can trade with discipline.
Whatever you want.
Yeah.
Uh, let's see. The Nasdaq, pretty much the same story.
Wow.
Pretty much the same story. Purse says range day is the worst. Hit daily loss limit on both of my combines. So here we'll do this right. How can you identify whether or not the market is going to trade in a range? I think Coach Paul and I just gave you a little bit of a hint because trust me, Purse, I don't trade range days very well either. I'm getting better at it, but when I identify one, I either go somewhere else or scale down significantly. So the way I like to personally identify a range, we can use Coach Paul's moving averages, right, where the 20 and the 50 are kind of wrapped around each other. But I'm going to look at VWAP, and if the angle of VWAP is flat for the most part, and we can see it in the Nasdaq here, from the time this is VWAP from the session open, from the time the New York session started, that is a flat angle. That is telling you that the market is going to be in a range until the angle of that VWAP changes. And I do have data on that. If the VWAP is this flat, it's a range, and I don't care what anybody says. Personally, for my own trading, right? Because I have to define it that significantly, or I'll try to trade it like a trending market, and trending markets just make more sense to me. So if the angle is flat, I cannot trade this market like a trend, and that is a definitive. Now, can that change? Like Coach said, news can come out. A big buyer or seller can come in and change the market sentiment. If and when that happens, then I'll adjust. But until that happens, I can't trade this like a trending market. Right. So looking for
And the
breakouts.
opposite,
Go ahead. Go ahead.
if you notice it's flat and you're good at that, if you're, that's why I heard Dolby.
Yeah.
That's a Dolby day, right?
Yeah.
And and that and trade accordingly.
Correct.
What
Yeah.
I would add to that,
Go ahead, Coach.
if your daily loss limit is 50%, you need to change that. I'm going to say, I can't say you need to. I would advise you to rein that in. Because if you think that uh, range days suck, which I might agree with you, I personally am not as adept at trading them, but the range days are the more of the rule. They're probably 75, 80% of the time we're in a range.
Right.
And you can get, I have, you can get torn apart like you just did. So this goes back to principles of success. Number one on the hierarchy is to keep the account alive. If you're fighting a battle, you better have enough ammunition to fight it. If you run out of, no matter what the no matter what your plan is, if you run out of bullets,
Yep.
um, you're kind of it's over. So
That's
I would pare that down, your daily loss limit, to a personal loss limit, probably at least in half.
for sure. Yeah, in his Royal Trades just put it in there. It only takes one trend day to remove 10 range days, so why fight the 10 if it only takes one to succeed? Yeah, you also don't have to trade. Right. That is a real option. Where if the market is not presenting a great opportunity to you, you don't have to trade it. And TBO, yes, we will look at oil. I think we're going to move on from the equities now because I don't know that there was too much else to talk about here.
Yeah.
oh, so just
We
last
could,
things.
coach,
See, go ahead, coach.
can we determine the paint is dry in the equities today?
Yeah.
Okay.
Yep, it is dry.
Go.
Just one thing CB mentioned, but VWAP angle doesn't change when price gets outside the range. That's exactly it, right? Where I'm gonna consider any price act if VWAP stays this way for me personally, any price action outside of this range, and it's up to you to determine what you're calling the extremes of the range. Uh, I would look at the New York session here, or like Coach said, the initial balance. So the first hour of trade, 2119 was the high. 2031 was the low. I'm considering that the range, right? Let me do that one more time. 119 at the high, at the low here. If I'm trading this and VWAP never leaves, that's it, right? So price can do whatever it wants, and I think it looks a lot cleaner on a higher time frame chart, a 15, a 30. But even if I was on a 3 minute, this looks like if I'm zoomed in this way, this looks like a breakout. But VWAP never went. So I'm considering this just price action, no volume following it, and safe to fade it. Does that mean it's going to work out to 100% of the time? No, but nothing does. Uh, let's move on to crude oil. Hey, that looks like a market that moved.
Yeah. Quickly too.
Yeah, it did. Um, I don't know that the news. So the timing of the move didn't really correlate with the news of the U.S. sending troops overseas. But I did see, I was watching on Quant Tower. There was just some big blocks of selling that came in, and once they started around the 7140 area, they just kept going. Like every 40 ticks, there was another big seller that came in there. Uh, Coach, I'm gonna map out the first 30 minute of the session and anchor a VWAP there and pretty choppy
Once again,
overnight, but it did it again. Go ahead.
VWAP never left the range.
Nope.
And actually tried to on that's interesting, a US Open, the highest it tried. That VWAP was right there at
Hmm.
8:30,
Yep.
right in the first half an hour. But and even if I was long then, but when it broke this, I'd almost like to break this down to a J candle.
Let's see what we got, if anything. So yeah, so there was a bunch of buying at 7137. If JD is in the chat, JD was calling us out in the Coach J chat, but there was a lot of buying at 7137. It happened overnight first, uh, around 6 p.m., 6 a.m. Eastern time. 7137, there was some buying there, and then uh, right at 8 a.m. Eastern time, there was another buyer there at 7137. And then it looked like it was going to break out, right? It looked like there was some follow through. Like you said, Coach, VWAP never got out of that range, or it tried to, right? If you anchor it to the crude oil open, it tried. Here's maybe the candle here where we get a push of volume. And once we close below that, and you can see it, right? The low of this candle here is 7147. We call it 7150, major psych number. The market pushed above there. We get really no follow through. And once we trade back through those ranges, any buyer that was there sold whatever position they were in.
Actually, I was long on a swing trade, and when I saw that action,
Mhm.
I just flattened out.
Hmm.
And Crude is back in. You talk about a market that's in balance right
Yeah,
now. I held it since Thursday morning, and I think I've
nice.
lost $100. It's really it's an imbalance, but that's a classic. And actually, if we look at that, I would have bought that. And this goes back to
Same.
being comfortable with the risk. And actually, I don't want to sell it there. It can go without me. Really looking at it, go, wow, that was a great sell. Well,
Hmm.
I don't know that when I made that buy, but I
Correct.
do know this. I'm going to preserve my capital. So, I mean, that looked really good.
It really did.
If I
Yeah, I
I
think
would
we were
take
looking at targets at
that meet again.
72.50.
Yeah, I had 72.08.
There you
But
go.
here's the thing, and this is why we talk about embracing uncertainty. I could go back. I see that kind of. I'll take it again.
Yep.
I don't, because I don't know the future,
Correct.
but I do know how to preserve capital. So, and so do you, and so does everyone in this audience,
Hmm.
right? You know how to, but you don't know the future. So that's just a great example. I even brought this up because,
I really like what you said, Coach, about not knowing because again, it's very easy and everyone does this, right? When you do your market review, whatever your strategy is, you zoom out and you cherry pick the perfect examples, right? Where, hey, if I just do this here, that's when it works, right? And then I'll make $1 million. Coach Vince, we need a time machine. But like you said, you were long this. You were long this. We can go candle by
yep,
candle where I'm long. Maybe I'm long from 71s, which I thought was a really nice buy because when I didn't take the trade, but I was talking to, one of the traders in the chat and seeing the buying at 71.37. You can actually scroll back in the Coach J chat, and we were talking about this, right? Where we saw the buying at 71.37, the market pulls back. And the way I'm reading this, where if this is a big buyer up here, if I get a pullback and buy it, I'm in a better position than where they are. So this looks really good. And at this point, you're making money with them, but that's when you go to assessing how the market is doing, and what you expect it to do. And once we got up towards the highs, the buying slowed down. VWAP started to flatten out a little bit. What do you do here, Coach? You take your trade off. You holding it? You are you trailing it?
uh, I myself, I'm
Mhm.
holding.
There you
It
go.
still looks good.
Right.
I accepted the risk when I got in, and then this becomes a very important thing. If you're used to just jumping in a trade without knowing your risk, you're going to have um, problems
Hmm.
because okay, now what? Right? It's like
Right.
jumping into a fight, without an exit.
Right.
It, and you've engaged now, and now now you're assessing risk. Your mindset is going to be under pressure, right? And you can be trapped. If it doesn't keep going, you go, well, and you've made some money. And I was up some money.
Yeah.
I'm like, here, and this is the thing, but I accepted. I put in a stop,
Hmm.
and actually I did better than the stop.
Nice.
But I was willing to risk two ATRs. I think it was like $300. But I got some new information that changed changed. And I said,
Hmm.
yeah, flatten out here. I could, one other thing is, well, if it's not good on the upside, I want to get short. I'm not good at that.
Gotcha.
I made my decision. I took my loss. And guess what? There's other places to trade
Right.
for me.
Um, and
So,
where coach is saying, got new information, it's here. We got back below VWAP. You see the selling, and it's just like, okay, okay. The market no longer agrees with that trade idea. Now I could hold on to it and say, no, it needs to go back up. But this is now new information, right? I think everyone could see it where, Yeah, this looks good. This looks good. Something's changing. Still holding above VWAP. Maybe I just hold it. We did, on this 3 minute candle, kind of hold at 71.50. Something changed. And now, who was that? Steve said, "Isn't that big sell volume bar break of the open? Is that a place where you would consider an entry?" And I'm thinking you're saying for a short. Steve, let's look at it. Do I short this right away? I probably wouldn't because I need to just, oh, hey, that's a huge volume candle. What just happened here? And I know for me personally, I don't want to be the seller at the low of this candle. And do I miss some breakout trades? I do. But I would rather the market, show me that something changed. I'm gonna frame this out, know what the high or the low is. The high is 71.52, 50% is 71.29, the low is 71.06. And now if I can get a retracement to somewhere around 50%, and that's exactly how it happened, I can take this short. If the market still agrees with the short, I can risk the highs of that candle. It's about 20 ticks. And then go from there. Coach, I'm going to do one more thing. I'm going to take some of these drawings off so we can see it. But from the time the market changed, right? And I'm not even going to call this one the change because this could have just been a healthy pullback in what was somewhat of a slow uptrend. But the volume significantly in this candle, we never got, we never really closed back above VWAP. First of all, we never closed above the high of that candle, right? We never traded to more than 50% of it. But that VWAP from that candle, that's the sign that the market changed there. Um,
Oh,
and
wow.
we
That
held
was
below it.
quite the break.
Yeah, yeah, yeah. Uh,
I would also bring that if it closes underneath that high volume candle.
this one.
Then if I would wait for that information because that's a huge amount of selling.
Hmm.
And like you said, we gave it a little time. Or if you take that candle and say, okay, know the risk. Okay, if it breaks the high of that candle, I'm willing to risk that amount and I can afford that.
Right.
Two key points: willing to take it and can afford it. So whatever that is, what it looks like about 50 cents.
Yep. Yeah. Around 40. Yeah. Around 50 cents.
So $500 on a one lot, or $50 on a micro,
Hmm.
or 250 on a mini. If okay, I'm willing to accept that because I like that. Then have at it. But I just, from my experience, if it closes below that low, like it did there, it's like, to me, I like that sell better because it's,
It,
there's,
it
there,
it it
it
it
didn't
moved away
recover.
from that range. Yeah. And if I'm looking at this, the yellow box here is the floor open for crude oil, 8 a.m. Central Time. That candle also closed below that, right? And here's the break the opening range, retest it, and yeah, we're done trading these prices. And then you see the angle of VWAP start to pick up. Uh, I'm curious about, yeah, this candle was that told the difference, right? Where if you were long, maybe you don't want to sell it, but this candle is significant. It sold below the VWAP from the open, with a ton of volume and more volume than the open. Yeah, that's saying something changed.
Yeah, there was there was a seller that changed the market.
Mhm.
It reminds me of pit days. Someone, it's going, and someone, everything's good, and you're on the buy side, and all of a sudden, Goldman or a big entity comes in and sells 4,000,
Yep.
and I have five.
Right.
Something changed, and
Yep.
they didn't. By the way, they didn't tell me before they did it, but I can react.
Mhm.
Because this is what trading is. I don't know. We haven't mentioned Tom Hugar in a long time, but if you haven't read his book, Best Loser Wins, put it in your library, read it, and understand. We again, knowing how to lose well is the main ingredient to becoming a very good trader.
For sure.
Like this one, like I said, it was good. If we can react like, oh man, they're wrong, or or act like a kid whose parents just took their toy away and it's time for bed, and cry and whine, and I want that back. I-
Right.
I've made those kind of trades. The best thing is like, okay, take take the small loss.
Yeah. It's so worth
Maybe
it after the fact. It might feel bad in the moment, but it's just like that's what you need to do. Um, that is what you need to do. Uh, just take because it'll turn into a bigger loss, and then you are upset. You start scaling up. How do you know that, Coach? Because I've done it before. Uh, just take the loss. We did have a question about the 3 bar reversal. If you can let me know what time frame you're looking at a 3 bar reversal, because I'm looking at a 3 minute and I don't see one here. But eventually, we did get a bit of a reversal of that move, right? If we go high to low on the day, we retraced back to equilibrium, 50% of that sell off, which the markets just love to do. So we see the selling continue. I did take a micro crude long around $70. And I think it was 69.96 I got in, and was just a little bit early, right? I was looking for a move here. There's a trade that I take all the time that is, volume exhaustion into a major level. This is one where it didn't work. I'll give a later example in that gas where it did work. But you know, what's the difference here? We never got that close, Coach, and candle closes are s- are so important. We got it here, right? This is the sell into 70. It looks like a lot of high volume. I didn't see an immediate, uh, follow through on it. So I took this long 69.96 for that reason, right? That's a setup I've seen in many markets, and I'm looking at $70 in crude as almost a super psychological level, right? It's a whole number, uh, you know, uh, divisible by 10. So everyone who's watching crude is going to be trading this. So initially, I had a trade that was in my favor, and I'm 20 ticks in the profit. I was looking for about 40 ticks. Uh, but we've also talked about this being a short continuation play as well when we don't get that candle close above the high of the selling that we saw come in. Right, the high of this candle 70.19. We didn't get it. We get that continuation, and this is where it can be dangerous to try to preempt some of these reversal patterns. Right, where sure I can take it. I'm going to limit the risk. My risk was very tight on this initially. It was going to be the lows of this candle, right? Because if it breaks, I'm wrong. Um, but I have to know that, right? I can't say, you know what, I'm going to go open stop loss on this because if the market wants to sell off another $2, then I was wrong and I preempted uh, a reversal. The real reversal came after this one, and this we sold into 69.50, and that's when we saw the selling momentum start to slow down. So let me remove some of this so we can actually see. We saw the selling momentum start to slow down here, where we do get some big volume. And remember, these are just volume candles. We don't really know what's going on in the candle, um, but you can kind of make an assumption about it, right? We're seeing high volume at the lows of the move. The candle close above that was almost the exact same trade I took, Coach, but difference was the confirmation of the close above it.
and like you said, you got out and took a good loss.
Yep.
Do it again. Doesn't mean the next one has no relationship, whether it was winning or losing, to the next defined opportunity.
Hmm.
That's one thing that if you're new to trading, it's a concept from gambling. Just because you lost a hand doesn't mean, in poker, doesn't mean the next hand is jinxed. Um, you you have to have a process in this game, whatever that process is, and don't rely on the last one being because you don't know if it's going to be 5 losers in a row
Right.
or 5 winners. So I love that example, Coach. Like here, and this is where it is. If it's lost, I'm okay, good. I'll look for it again. In sports, like
Yep.
in football, what is football season? There's great. A good team consistently. plays to their strength. They have a process. We're a passing team. Just because there was a bad pass or um, the quarterback got sacked, or unless you're in Chicago and you've never had a quarterback, um, I can't comment on that. But you play to your strengths, and just because that play doesn't work doesn't mean you don't try it again.
Right. Yeah, you take
Um,
the information, what made sense for that play, why didn't it work, right? And that's why I think I said it last week, right? Trade whatever strategy you trade long enough to know when it doesn't work and exactly what it looks like when it doesn't work. If I'm preempting a reversal here, it's not going to work if we don't close above that candle. And I know that from having that many trades do it. So is this a quick scalp and I can get out for 25 ticks? I like that trade also, right? That's $250 on a one lot mini and a couple of micros. That's still a nice trade. Uh, but I can't hold on to this as, hope for the future if the market doesn't agree to it, right? I have to take what is presenting to me. Um, and anything else on crude, coach?
um, no, it's no, I have nothing
Yeah,
really. It's back above the 200, but this is late in the day.
yeah,
Um, I, I have nothing left in that. Um,
got you.
friendly. Besides, I'm friendly to it, but other than that,
Nothing else. Got you.
yeah. We have
All
a
right.
couple questions here. I probably want to
Yeah, let's get to those.
question. When you're up 100,000 for the year, would you switch to micros to scale down for the rest of the year? Good question.
Good question.
Um, my immediate thought is no. That's my immediate thought. I would say, if where were you up 100,000? Did you have $100,000 account,
Hmm.
or did you have a $20,000 account and you're up 100,000? It's relative, but I would do this: maintain the account. If you have a drawdown of, and you have to know your trading style. Can you have a drawdown of 10% in a day? If it's that volatile, I would say, yeah, cut your size. But I would make that decision based upon percentages of my capital. How about you, coach?
I think the fact that you're asking that question, might mean just heed some caution in your trading, because it's a very monetary focused question, right? Maybe you're looking at it, hey, I had 100K a year and I want to preserve that. Uh, I would say if that is on your mind, I don't want that to affect your trading going forward, having to preserve that much of it, right? So maybe you want to take part of that, put it aside, and say, hey, you know what? I had a 90K year, and I'm going to risk whatever's left of that, right? I'm going to take a percentage out of it. But just be conscious of that, right? Don't let that affect your trading. And if it does, then yes, you need to scale down because you did ask the question, right? So it's on your mind for a reason.
And one last question: is it ES good to trade on higher time frame like 15? Would you look there for support resistance trades?
Yes. Yeah. I love the 15-minute chart. I'd switch anywhere between a 3, 15, and 30 for the most part.
Yeah, I would agree. Just be consistent. Don't the one thing that when we do that, we start, well, I'm losing here in this one. I'm gonna get a new. I'll enter in this time frame and get out of that time frame. That that's not a good habit.
And you're losing in every
Just make
time frame.
sure it's consistent. Yeah. As traders, I've seen this, done it. Okay, I got in on a 10-minute and now it's not working. Well, maybe I can find something different. Oh, that three looks good. And why did I get it? Don't. Just make sure it's consistent, that you're executing in a hierarchy, higher time frames down to the what I call the execution time frame. And that's where you can define your risk.
Yep. And then one more quick one from Joe Sams. I have a question. The opening range is the first half hour of the market. It depends. It depends on what time frame you're looking at, like we were just talking about. I use a 3 minute, so I'm going to look at 3 minute opening ranges. You'll hear some traders use a 1 minute, some use 15, some use 30s. I use two different opening ranges. And thank you, Coach Paul, for this one. The 30-minute market open. So the market opens in 55 minutes. I'm going to look at that first 30-minute candle to get a theme for the day. And then on shorter time frames, I'm going to use a 3 minute and look at the session open. So London session open and the New York session open.
And I
Um,
use I'll look at the 3 minute
yep.
also for day trades, and Coach Jay turned me on to that. Consistency though, it's
Hmm.
consistent. Once again, I'll give a quick example. When I was, the opening range meant a lot more when it was just um, an exchange or a pit type environment, because all the orders had to come in at a certain time of the day, and it had to come into the floor, into the exchange. There was no outside time frame. So that time, that opening range was the first minute. Coach Hogue still watches that, and it works for him. Um, the first minute really meant more than, because that was your in the exchange opening range. That was the first minute was the opening range, and if you had a trade outside of that, it had to be busted or adjusted. Without We don't have too much time, but that's um but I will go to this in equities, or the quote opening range official usually has the most volume. So the first half an hour, the first 5 minutes has the most volume, and that's important.
Yep. I would agree there. Let's talk about gold real quick, and I do want to make sure we get to some other markets because, Coach, we did say there was
Hmm.
some things on scouting reports. Gold made new all-time highs again today. 26.59.8 is the new all-time high in gold. Still continuing this uptrend, doing it the way gold does, where we have a really strong rally and then kind of this balance range that we're in, but it's still channeling to the upside, above the 200 moving average. The 50 is above that as well, and the 20 being above that. Uh, Kind of just this slow trend up, and it does not seem like it's stopping anytime soon.
Take a look at the daily real quick.
It's going up and to the right.
Okay. Yeah, it's going up and to the right. Uh, It's not. There's no topish action there. It could, but
Yep.
I don't see a high probability of that thing turning around anytime soon.
No. And yeah, if I'm trading gold, I'm looking at any pullbacks as opportunities to potentially buy. If I'm short, I know that I'm counter trend the higher time frame, so I'm not staying in it long, right? I may see a short trade set up, uh, but that is uh, going back to football terms. That's the check down, right? That's not a hail mary, right? I need 3 yards on this screen pass, right? Just to keep the ball moving down the field. I'm not looking for a touchdown on this one. I'm looking for maybe a couple of ticks and get out because higher time frame, we are going up and to the right. Um, and let's get into the scouting report, Coach. I know you said you had something on yours. I'll let you go first, and then I'll pull up what mine was for today. I don't know if it's going to stay on there, but I'll go over kind of my how my daily scouting report changes. But let's get into what you were looking at today, Coach.
In the grains,
Okay,
specifically corn.
corn.
We look at the daily. Um, we closed above the 50-day moving average. Um, we are having, this is a time of year. It's not an accident. Yesterday was the autumnal equinox. Fall officially began yesterday, and we had this rally, and we closed above the 50-day moving average. Why I bring that up is there's a thing called seasonal lows. Um, and we had a pretty strong reaction into a market that's been trending down for the better part of a couple of years. Um, and pretty strong action, consistent when we made the low on the opening, and just we made the close almost at the highs. What is
Mm,
that telling you? That's short covering.
yep.
Um, and this is the time of year we're above, so it's almost like a release. With the 50-day moving average is pretty important for fund traders. We have that, they're short, right? We have this time of year harvest lows. Once we'll go through that sometime maybe, but it, the harvest is coming in. There's this large harvest. I think it's record, and we're rallying. So
Perfect storm.
I like the structure. I want to
Nice.
buy the dips.
I like this on the daily, this kind of engulfing candle over the last 2 days,
Yeah,
closing above the high of that. Yeah,
point.
that looks really nice.
And on high volume. This is the highest volume I see in months,
Yeah, this
and
looks
there
really
was
good.
no big report. So if I was short a dev as a as I'm if I was short as a position trader, I would definitely cover.
Mhm.
So
Nice.
that's
Good
if you
one there,
haven't
coach.
traded corn, it's a great place
I know
to
if
cut your
Coach Jack,
teeth.
I know if Coach Jack is listening, he's taking notes.
Well,
He's probably already long.
yes,
Uh,
we got to get him as a guest one afternoon.
For sure. So I just and thank you for that, Coach. If I'm trying to remember, the last thing that you definitively put on a scouting report was micro Bitcoin, which provided some really good trade opportunities over the days following it. And of course, anything we say is for educational purposes only, not as a suggestion to take a trade. But just an idea of potentially an outside market. Maybe you want to put it up on the side when the Nasdaq and ES are chopping around in tight ranges and you can't figure out which way it's going. Maybe trade it in a practice account, right? Just see, hey, this is another market. Get used to the fluctuations. If you're trading corn, have some patience, uh, where it may not move very quickly, but markets are markets, charts are charts, and you can apply really any technical analysis that you use. Uh, so for the last thing for me, I was telling you guys, I am not a great uh, range bound trader. So for me, I will just go find opportunities in markets that are presenting my playbook setups. Um, I kind of learned to trade that way by trading stocks where we would have a scanner and we're scanning for what the highest volume was and highest rate of change. So I'm looking at this watch list. When I identify that the NASDAQ ES are chopping around, I'm looking at this watch list, and the first thing I'm looking for is a large percentage move. So we can see nat gas was up 5.37% for the day. At one point, that was above 6%. So I'm looking at that and saying, hey, there is opportunity in nat gas. I don't know what it's going to be. I don't trade it often, but with that large of a percentage, it may present an opportunity to me. So I'm going to switch over to nat gas, and we'll go to a 15 minute. And this contract is actually already rolled over. I was looking at this on Quantower, and this level that is the high here, uh, this level that's the high up here, 2.865. I'll put a line there. That lined up with 2.6 on the prior month's contract, right? So I'm reading this and I'm looking at 2.6 as excuse me, I'm looking at 2.6 as a whole number level, right? The same way I would look at a 2,900 on the NASDAQ. So I'm looking at the market push up into this 2.6 level. And again, here it's 2.865. It's already up 2%. And I'm just thinking to myself, when I've seen other markets do this, and really it's with trading stocks where you see something that's up 20% and coming to a major level, when we get the rejection at that level, and again, this level lines up with whole number 2.6, I'm taking a short. Where I'm looking at the sustainability of the move. Uh, Actually, it might have been closer to here because it did make a second high. Okay, so I took the trade twice. So this is where it lined up with 2.6 because the trade happened earlier. And Garrett just said exhaustion gap short is A plus, 100%. So what had to happen for me to say I'm comfortable with this trade? I need to see the market push to a whole number level. I need to see it be on very high volume because I'm looking at this volume here. That's a clear anomaly, right? That wasn't, a market open. This was actually a reaction, I believe, to the PCE print because it happened at the same time. I'm looking at this volume and saying, how sustainable is that volume? Um, what is the likelihood that the next 3 minute candle is going to have anywhere near that amount of volume? It's pretty low because to me it just looks like it came out of nowhere, right? And if we zoom out, look at all the other volume candles, going back days, right? So that's an anomaly. I'm looking at that and saying, anomaly at a major level, the market's up 6%. It's a quick short. Do I think that the market's going to retrace this entire move? I would be stupid to think that, right? Because I don't know what created the move, right? It could be some news that is going to push net gas another 20%. I truly don't care. It presented an opportunity for me to take, a trade, a short trade, and if I apply all the other analysis that I do, the high volume candle, I'm taking a short at the high of it. 50% of that candle is my target. That is a 6 minute trade on a market that I was not looking at prior to this happening, right? So seeing that percentage pop up, and then switching over to it, seeing a volume spike and it presenting an opportunity at a major level, it's kind of like the perfect storm trade where it's just like, yes, all of these things are lining up for me to take a quick trade. Now, could I have waited for 50% to hold and then bought it? Maybe. And then at least that way I'm getting in flow with the market. But that is just a playbook setup that I've seen, right, play out time and time again. And again, it happened now at this point where I took this short. I'm getting out at 50%. Now I'm staying here, right? I'm not going to leave Nat Gas and go somewhere else. I'm going to stay here. And coach, you still there?
Yeah, I am.
All right. Uh,
Sorry, I
I thought you
I
froze for a
got
second. My
caught on
bad.
that.
Um, so I'm reading the flow, right? Because this market had a ton of volume trade, big percentage. I'm not looking at this as a market that's just going to stop trading for the day. So when it pushes back up towards those highs, I'm not seeing a volume push to get us above it. I'm taking the same trade again, right? If I saw follow through volume while I'm reading the tape and I'm seeing buyers step in here, then I'm not going to take that trade. But when I don't see the buying come in, I'm taking the same short, same target. That's two trades in a market that I don't look at every day, but presented an opportunity. And here's a third one, and eventually it did break out of that range. But uh, that's how my daily scouting report goes. Um, there was actually another one in soybeans that did the same thing, and I know we're above time here, so I'm going to cut it soon. But soybeans did something very similar, right? Very high volume push here. Soybeans was up 3%. I don't know how often I see soybeans being up 3%, pushed into a level where it looked like it rejected. When it came back up there and there were no buyers, that's another short. Um,
That's a great example. What is your risk when you do that? Just
uh,
new highs, or
So yeah, so I try not to do just new highs because especially if it's a market that I'm not trading, what I'll usually do, coach, is I'll go one ATR on something like this because if it's just going to continue, then I'm not gonna. I don't want to be a part of it because a lot of times it's a market that I have not traded before, so I'm not comfortable with the movement. I'm just trading the that pattern. But I'll go one ATR and then I'll get out if I'm wrong.
and you probably get one, two, or three ATRs in return.
Right, right. So it's just a quick trade. Again, and to me, I'm okay because at this point, this is an hour into the session, a half an hour into the session. I've already identified that the Nasdaq and ES aren't going to give me what I'm looking for, so I'm okay just scrolling through the watch list and just going from there. And that one ATR is on a 3 minute chart. Um, But yeah, that's it. That's how my daily plan goes. So if you're in the Coach J chat and you see me mention, the British pound is doing X, Y, and Z, it's because it's because it popped up on the watch list, and it's giving me an opportunity to trade it. So, Coach, you got anything before we go? We are a little bit above time, but I think this was another great session.
Um, First of all, we haven't asked, and I'll do now. If you like what you saw, hit that like button. It's important. And looking to tomorrow, we talked about uncertainty. We could
Hmm.
have an explosive day either way. The number one rule in the hierarchy of trading is preserve your capital. It's all right to lose. lose well, let your winners ride. I can't say that enough. So don't feel like a losing trade it makes you a bad person or even a bad trade. So keep that in
100%.
mind tomorrow.
Tomorrow we have, and I'm gonna be tuning in for this one with my notebook. I'm gonna see if I could find a code to get into the call and maybe sneak in. But we have Brian Shannon on tomorrow, who wrote the book on Anchored VWAP. I know it's going to be a
Oh
great
yeah.
segment. I've read his book, but Hogue is going to be on asking him questions. If you haven't, read the book or heard Brian Shannon before, I think I've read that book, and even if I didn't trade VWAP, I think it's a great uh, example of how detailed someone could and should be in their trading strategies, whatever it is that you use, right? So, hearing him talk about it and kind of go into all aspects of it is pretty cool. And again, me being a volume trader, I'm going to be tuned into that. So, make sure you check that out. It will be, I'm sure, split out to its own segment where if you can't catch it live, you can watch the replay. Also, trade with the pros. If you want to pass your Top Step Combine on Top Step TV. Fill out that document there. Make sure you fill out exactly what they're asking. I heard something mentioned before on the show that there was some stuff in there that they weren't asking for. If you want to get on the show, make sure you put it in there. The name of the book is this one here. Green screen's kind of cutting it out, but it's Maximum Trading Gains with Anchored VWAP by Brian Shannon. Um, and let me see if I got anything else. Think that's about it. Coach Ray, Coach Vince are doing classes every day in Discord, uh, 6 p.m. and 7 p.m. Central Time. And then Coach Hoop let me know that his schedule is going to be every Wednesday and Friday. So make sure you check those out. Ton of great content, ton of great information for you. And again, all different styles of looking at the market and trading. And then, of course, we got Coach Dakota, 7:30 Central Time with slow markets, and Deanna with the London Open, who's been absolutely killing the Nikkei at 3:30 Central Time. So Top Step almost 24/7, providing you content, hopefully helping you with your trading journeys. Thank you everyone for joining us today. Hit that like button if you haven't done so already on the way out. Coach, thank you as always, and we will catch you all tomorrow.
Thank you, coach, and see you tomorrow.